The Bollinger Band squeeze, one of the most powerful trading setups in the world. Let's look at it, and I'm going to give you something special here at the very end, a little twist to it, a little extra trick you can apply, which will get you on the other side of the amateurs. You know, what most people do doesn't work, and so we're going to have you do what most people don't do. All right, so let's jump right into it and give you the secret sauce. So first of all, let's just cover the Bollinger Band squeeze real quickly. And as you can see, the Bollinger Bands here are squeezing together. That means they're very tight. And we've got price bars right about in the middle, and boom, okay. So that is the very first bar of the Bollinger Band squeeze breakout, where we're going from low volatility to high volatility. What we're looking for, again, is the tight range between the upper and the lower band. And we're looking for the upper band to be angling up and the lower band to be angling down, and a nice red candle. So now, as you can see, if we short this puppy or buy puts, what is great about this is it goes down and then, that's not supposed to happen. Wait a minute. Let's see if it goes down now. Nope, still didn't go down. Wait a minute. Why is it going up? Okay, this is a bad example. Okay, we're going to edit this out because that one's no good. Okay, let's show another one that actually worked out, like most of them do. Okay, let's start this over. All right, so the Bollinger Band squeeze, we've got the upper and lower Bollinger Bands squeezing together. We're going to wait. Our first signal is for those two bands to start moving away from each other. And a big, in this case, bullish, a big green candle. And that's the one we're going to take. We're going to get a high volatility move to the upside. And there she goes, piling up. Okay, sometimes you get some red bars. That's normal. And some inside bars. And, wait, that's not supposed to happen. Okay, so now it went down to the lower band. Okay, let's edit this one out too. Okay, so John, just if you could clip that, and let's find one that worked. Okay, they almost all work. Right? They almost all work. It's a common mainstay of trading. So let's find another one here. Great. Look how clear that is now. Wide range red bar, clear angles on both the upper and the lower Bollinger Band. So we're going to short that pup. Are you serious? Okay. Wow. Now we get an engulfing green bar. Something's wrong here. It's not supposed to happen. Okay. So that was just temporary. One bar fake out, and now we're back into our bearish position. And so this is this is a mess is what this is. So okay, now it's going up. All right, so I guess, all right, so you know what, sometimes trades don't work, and that's normal. So okay, we'll say we got a loss there. Now we finally got another clear sign. So all right, we take a loss, and then we're going to get back into the same pattern, which is Bollinger Band squeeze. And then now we're long. And so now we're going to stay in this to the long side, and it goes all the way down to the bottom of the Bollinger Bands again. Okay, this got a, wow, seriously? Okay, people, what's going on here? I thought these Bollinger Band squeezes were supposed to be gold. And yet, I mean, really, have you ever felt like, god dang, if you just took the opposite side of all your trades, you'd be a millionaire? That's what's going on here. So let me ask you this. What if you actually did that? What if these patterns that everybody and their dribble know, if we just traded them the opposite of how they are traditionally traded? So here's the deal. Most people lose money trading. We know that. So if you're doing what most people are doing, you're going to get what most people are getting, which is losses. So all these traditional patterns of price action, everybody knows them now. So sure, they may have worked back in the days of yore, but now that the masses know them and are trading them, now they no longer work. They're out of date. So the answer, and here's the secret sauce, is to trade the opposite, to take the opposite side of these classic techniques. And therefore, you will be doing the opposite of all of your normal trades. And just like you probably thought, I know I've thought this before, if I took the opposite side of all my trades, I'd be a millionaire. Maybe not a millionaire, but make a lot of money. Who knows? But anyway, there's something to that. So let me show you how we do this. Let's trade the opposite, and let's dive into the world of opposite trading. So here we have our Bollinger Band squeeze. Okay, bands are tight together. Upper band angles up, lower band angles down. Nice, big, that's what we wanted. I said we wanted a big green bar candlestick confirmation, not just the indicator. So we're combining the indicator, the Bollinger Band, with price action. But you would think that would be enough, but it's not. Because again, this is what everybody's trading and everybody's wrong. So we're going to trade the opposite of this. We're going to take the trade against the amateurs. Now, timing is the key because there are times when it will continue to go up. So we can't just trade the opposite of it all the time. So here's two ways to enter. What I do, well, one of the things I do, first of all, is I apply a 15 EMA here. That's what this is. It's the 15 EMA. So I'm not using the middle Bollinger Band. I have removed that. So the reason I do that is specifically for this type of trade. If I were to use the traditional middle Bollinger Band, then what would happen is that line is basically halfway between the bands. And I want to get in earlier on these Bollinger Band fakes. And so when I use the 15 EMA, see how it's closer to the top than it is to the bottom. And that's what I'm waiting for. I'm waiting for the price action to cross that midline, but I'm using the 15 EMA to get me in a little bit earlier. So that's entry number one that you can choose from. That's okay. It's okay. My favorite, if you want to be a real sophisticated investor, is to put a cycle indicator on your chart. That will get you in earlier. Now, cycle indicator, it tells you when we have a cycle high and when we have a cycle low. And that is a timing indicator to get you into the market. So with a cycle indicator, you could actually get in way over here. Because once you've got a cycle high on your cycle indicator, then you know, oh, okay, it's time, because that's what cycles mean, timing, got a cycle high here, so therefore, oh, this isn't going to go up anymore. And so it's time now for it to go down. So that is the key. Now, volatility does not have any correlation with direction or trend. So Bollinger Band squeezes, just say it's low volatility, we're going to go high volatility, but it doesn't tell you the direction or exactly when. And that's why you could trade these. I trade them all the time, but you need these other tools so you know what the direction is and what the time is. And most important is the timing. By the way, if you want to get my cycle indicator, I give it away for free to my viewers like you. Just go to indicatorwebinar.com. I put together a tutorial on it, absolutely free, 100% free for all my viewers. I don't charge you anything for it. And by the way, also for fair disclosure, the indicator is something that's already on your charts, but I modify it a bit. So in the webinar, I show you how I modify it. And it's a recorded webinar, so you can watch it whenever you want to. And I'll show you how to set up on charts and how to trade it. There's a little special technique. We're looking for a certain pattern on the cycle high indicator here. I'll teach you all of that. So go over there and get it.